over your analysis, James, that you put together, and I think it's a terrific head start, but I'd like to recommend there's a couple things that maybe just a different way to look at the way you put these numbers together. This was kind of put together, from what I gather, in total, okay?
Yes, and it was done 2 weeks ago, and since then we've split it out by A, B, D,
Okay,
A,
good,
B.
because that's the way it has to be.
Yes.
Unfortunately, for some reasons that I'm going to get into in a couple of minutes, you can't do this in totality. You have to do it by fund, or it doesn't work.
Right. And we're focused to discuss Fund A.
Okay.
So you could start there, and we'd be pretty familiar with the...
Okay. So you don't want me to address these
Well,
questions, or I'll do it. I'm here for you. So you tell me what you want. I'll be happy to.
The most
tell.
basic question we have is regarding Fund A, since the most focus has been on that. And our understanding is that the 2016 adopted budget had revenues and expenses such that the expenses exceeded the revenues by $227,000 in the budget.
That's correct.
What we would like clarity on is with respect to the balance sheet. So the annual update document showed the 2015 balance sheet for each of the funds. And for Fund A, it shows a balance, I assume at the end of 2015, of $377,000.
No, it does not. I have to disagree with you.
Okay, I'm probably using the wrong word. Page 4.
It does say total fund balance, please,
Page 4 of the annual update document.
Fund balance, as this report represents, is made up of several types of fund balance.
Yes, so so the 377 is the total, what says total fund balance here. And it's made up of several components.
Correct.
137,486 is a category called restricted, and that includes balances of the town hall of 125,000, and certain other things like the garden club and the playhouse or whatever, a total of 137,000.
That's correct.
Then there is this 227,000 here that's called assigned appropriated fund balance.
Correct.
Is that number for the 2016 budget?
That number is for the 2015 AUD reporting balance sheet.
Understood, but is that 227 representing monies that we have in we have a category in our 2016 adopted budget of 227,000.
Correct, that's separate from this.
Okay, what is this 227?
The board chose to take $227,000 of fund balance to balance their budget for 2016.
For 2016?
Correct.
Okay, so that I'm actually saying the same thing, but maybe in a different way. So in other words, the shortfall that I described starting out in the 2016 budget of 227,000 is this is meant to
Balance that budget.
Okay.
Yep.
So in other words,
So next year,
for 2016, we're in essence even.
no.
Assuming that we use this 227,000.
No, because next year, when you create your budget in September or October, you have a $227,000 hole in your budget, because you don't have any fund balance to be able to
For what
continue
year?
that.
For what year?
For 2017.
Okay, understood. But for what we're doing this year, these are the funds that will take care of this year. I'll just say for me, I'm confused whether we're in the whole 227,000 in 2016, or does it start in 2017?
It's actually in 2016, because when you go to budget for 2017, you don't have any money to use to balance your budget.
I understand that for 2017, but I first want to get through this year.
Well, if things go on the way they have been for the past few years, you're going to be in the same situation, only double.
Just tell me this, if things go on as we budgeted, a 227,000 shortfall, is that this number here?
Yes.
And we would end up with that negative $787.
No, you'd end up with a negative 227, because you wouldn't have any fund balance to use it.
Can someone help me out?
What's somewhat confusing here is the number 227 shows up twice And in fact, if you look back 4 years, it shows up each year for 4 years.
But we actually don't overspend by 227 in any of those years. It's usually less.
Well, no, what I want to say is that, I'll say routine instead of habit. By routine, each year, 13, 14, 15, and then remember, 16 was a rollover budget. So 13, 14, 15, 16, by habit, the town took $227,000 from the reserve, the unappropriated fund balance, the unappropriated fund balance, that's the name. They took $227,000 each and every year. Now, when they did that, it was to offset raising taxes and other monies that came in. So this was what they were short, they took from savings. And so you keep on seeing 227, 227, 227 whenever you look at an AUD.
But let me interrupt.
When they went into 2016, the budget that we're in right now, there was no money in the fund balance. It was a negative $786. So therefore, they appropriated literally 20% of their budget with monies that didn't exist. So this 227 is showing that was the monies that they took for the 15 budget. In 15, they had 227,000 of appropriated fund balance. They went to their fund balance and they appropriated it. Now, if all the money had equaled out, there would have been a surplus that would have suddenly transformed itself into 16 into being an unappropriated fund balance. It would have gone from appropriated to unappropriated. So each year you see appropriated, unappropriated, appropriated, unappropriated. There's 227. So appropriated, unappropriated, appropriated, unappropriated. Except for in 16, it wasn't there anymore. That's the problem. And so you have a true structural deficit equal to 20% of your A fund.
If the actual expenditures and revenues mirror the budget, you will.
Yes.
And in 2015, our deficit in Fund A was actually $149,000.
Okay? So,
So it wasn't 227.
no, but it's still 147.
So
So again, I've never been through a budget cycle with you.
I showed you that spreadsheet that
Yeah. Mhm.
that shows the fund balance at the beginning of the year for 2015.
Mhm.
Then the actual revenues for 2015.
Mhm.
The actual expenses for 2015. The shortfall of 149,000.
Mhm.
And then a fund balance of 377,000.
But that fund balance of 377 is not 377. It's minus 786. Because you didn't take into account the reserves, you didn't take into account the prepaid pension that is non-spendable, and you didn't take into account the appropriation of $227,000 of fund balance to balance 2016.
Yeah, I did, because I'm only going by what's on this balance sheet. I have no other, I don't know what else to,
What you're doing, your beginning balance on that spreadsheet of 525, 548 is it does not have the reserves in it. So there's where you're off.
it does not have the reserves.
It includes the reserves inappropriately.
No, the reserve should not be included for these purposes.
Correct. Because last year when the AUD was filed, they didn't appropriately split out all of those reserves. So that's
this
your
is a-
fallacy.
My fallacy or the fallacy of the report that I'm looking at?
Well, again, I didn't do the 14 report, I only did the 15 report, so we fixed it in 15.
Okay, so to,
The 193.
So 14, we only had 62,000. 15, we're negative 786.
You didn't have 62,000. You actually only had, it was actually, I think it was 180,000, because we had $50,000 in a tax stabilization reserve as well. So you were actually short in 2014 too, if I went back and fixed 2014.
okay, so that's the problem, is
Yes.
that we're looking at incorrect data from a past accountant that's not true.
That's not accurate, correct?
Well, then I can't, I guess
yeah.
I'm lost now.
But 14 doesn't have anything to do with 15.
No,
It's just,
it's fixed.
when you look at the 14 AUD, you're not looking at real numbers.
Well, I'm looking at the New York Controller's Report, the balance sheet in the New York Open Books. And it shows that the balance for Fund A at the end of 2014 is 553. You're saying that number is incorrect?
That's correct.
Okay. And it begins the next year, 2000. So the next year would start off with that, perhaps plus or minus some adjustment.
Because they just get their numbers. from
That's a correct number, right?
What number is correct?
The 553 that we just said? For
That's what was reported to the state, yes.
That's not a correct
But
number.
it's not a correct number, not an accurate number.
How far is it off?
I'd have to go back and figure it out, but it's significantly off. You
Okay.
would have had a negative unassigned fund balance in 2014 if it was done correct.
So let's go to the 2015
Mhm.
balance sheet for Fund A. That's
Mhm.
correct.
Yes. Mhm.
And it has assets of 405,000, liabilities of 26, and then other asset categories, the fund balance, the general reserve that we talked about before, and then the assigned. I guess the thing that I keep,
Where you're getting confused, Jim, I think, is that this 227,
yep,
okay?
whether it's 2015 or 2016.
We have to report as of the date and time, okay? So this report is reporting your position, your fund balance position, as of December 31st, 2015,
Right.
okay? To effectively report the accurate fund balance for that particular date, $227,000 of that fund balance is gone. It's restricted. It's used for last year's or next year's taxes. So you can't use it for anything else unless your actual receipts and expenditures or economic activity for 2016 doesn't effectively represent the budget that you put together. Okay?
We'll get to that in a minute, but
So when I came to the board with this problem, I wanted to make sure everybody focused on the fact that if everything stays the way it was budgeted for,
right.
we're gonna have a $227,000 problem because you're gonna have to replace that $227,000 with taxes if you don't do something.
For taxes for the year 2017.
Correct.
Okay, so I'm still confused, because what I'm trying to get a beat on is where we are for 2016. Is this money, this 227, held in reserve for 2016
Yes.
shortfall?
Correct.
Okay, so if we go, wait, let me finish. If we go through our forecast this year and we come up with saves, and just imagine that for some reason our revenues increased in Fund A and our expenses decreased, and we actually came in, instead of a 227 hole, 0. We came in at 0.
Mhm.
What happens?
Then you would have
We'd
fund
have
balance
We'd have a 227,000 fund balance at the end of this year.
if you didn't use it to balance taxes.
We'd have 227,000 to use for next year.
No,
You'd be back to being simply broke.
even. You'd be back to even.
I don't understand still. And I'm fine. If I'm the only one that doesn't, I'll live with that.
No, I think it bears more explanation. I mean, one question is this real money or not? Can we pay bills with that money?
You have,
He says that we've got $1.2 million of bills that we're paying. Part of that.
your budgeting to spend is $227,000 more than the money that you're gonna receive from taxes and revenues.
For 2016.
Correct. Now, if you assume that you don't, if you assume that you're gonna follow that budget, you're gonna be $227,000 short. Okay? So you're not gonna have the cash to pay your bills. Now, if you cut your expenses so that it's even, then at the end of the year, you're gonna be even. But then you gotta look to the next year. And the next year, you've already built in this $227,000
Okay.
shortfall.
All right, so let's say it a different way. Let's say that we attack our structural deficit and that we actually come in even this year, and we think that we'll do the same the following.
Well, if your budget can balance, then you'll be okay. If your budget can't balance, then you won't be okay. That's the point.
And if we balance, what happens to the 227? Stays there?
If you
Or we
choose
can-
not to use it for next year, then
Yes.
it goes away.
I think the
Then
number,
it goes down to
what I'm
zero?
thinking is right.
David, do you have the 2016 adopted?
I do.
Imagine that this was the 217 budget that we're looking at, where it says general fund appropriations and provisions for other uses, 1.2 million.
Yeah, got it.
That would have to say, help me with my head now, 99,000, 900.
It would have to be $227,000 less.
$227,000 less, subtract it, from me. Help me out. About
Oh,
900,
yeah,
973.
974.
So if you say you could run town government, aid fund government, on $973,000,
You're good.
you're good.
And we don't need that 227, which is the.
But you have to find $227,000.
Savings.
Cuts.
Like that,
Cuts.
right.
Not savings, cuts. And now the thing is that some of that is being found because there's overstated expenditures, but not all of it. We're short about 140 some yet.
Right. But this
And
unexpended.
so $140,000 out of a $970,000 budget. See, 973 is your number, and you got to find 140 some thousand in cuts. What do you cut?
But this 227, it's an accounting fiction, isn't it?
No,
Well, it's, I
Can we
think
pay bills with it?
yes.
No.
Well,
That's what I want to know.
Doesn't
No,
exist.
you write a check
wait.
for
He said that
$227,000.
we've assigned it to pay bills for 2016.
right, it's assigned to 2016.
But it doesn't exist.
But it doesn't, so from January 1st, 2016, that money's gone. Because you said, I'm gonna use it to spend it on my budget.
And we're saying that if for some reason we come up with saves or cuts that are equal to that, we'd have it.
You could.
See, I understand.
But
I
then
understand.
next year, when you go to make your budget for 2017, you better be able to
I get that.
maintain those
I get
cuts.
that, but, see, I come from a different, I don't.
And again, I said to Maria from the start, when I started this, I said, this looks bleak,
Yes.
but if we get together and strategize and sharpen our pencils, it won't be as bleak as it sounds.
I agree, and that's what I'm trying to get at, and I think it's not as bleak as it sounds, but.
But we still have to take measures to do what Michael just said, which is to balance our budget.
I just want to know where we are now. And it could be just that we have a definitional issue about when we count that 227, whether it seems like you're pushing 2017 forward.
Because it's gonna be a problem when you do your budget.
Yeah, I know, yeah. But I want to know, first of all, where we are for 2016.
For 2016, right now, you have 0 fund balance to use, 0. So if you can prepare your budget with using 0 fund balance and not
Right.
also talk about building for the
Wait.
future.
So just another way to say that is, based on this, if we go with our budget of 227 over, we make it through 2016, paying all our bills, but we're in.
Then you're gonna have to raise taxes.
Okay, that's what I
And
understand.
then we have no fund balance left.
Correct.
Or we have to make cuts starting.
Or you have to borrow money in anticipation of.
So let me just go around the table, because it's important that we all share this, and not just have one or two of us understand it. John, David, are you clear on this? Because it's kind of confusing.
Yeah, I really want to know, is that real money or not? I don't have an answer to that.
He says it's real money for this year, 2016.
Right, but
So the people say it's already spent, and I'm thinking, oh, it's spent, and I can't use it for 2016.
It's-
You're saying it's reserved for
It's
2016.
spent because it's appropriated.
For 2016.
Correct. So the people who have been given their budgets and can manage those budgets,
Right,
if we do nothing,
right,
we'll be able to spend all that money,
right.
and we won't have the money to spend anymore.
For next year.
Right.
I think sometimes we get taken up in language that's not familiar to us, and I always try to bring it up to a concept. And I want to say what I've learned here, actually it's what I thought I knew, and it's what I've heard again here, is that we have a certain amount of money that are called revenues. And we get it from the state or from things, but and we get it from real estate taxes and that kind of stuff. And so let's say we create a budget and it's $1 million. And we look at our revenues and they are $800,000. And we had a little slush fund over here, excuse me for not calling it appropriate or inappropriate,
Good way to look at it.
Cash and
so we had for fair years, we kept our taxes at $800,000, we kept spending $1 million, we'd add $200,000 every year, and we did that in 2016. Only now, there's nothing
In the slush
anymore
fund.
out there.
Well, there wasn't
So-
then.
There was what?
At the time you took it, it wasn't
We-
there.
It wasn't there, so we really have $1 million revenue, which came from money we really don't have.
For what
And if
year?
we spend, for this year, we spend that $1 million, if we actually, spend our budget
Yep.
and spend $1 million, we're gonna be $200,000 short.
No,
And-
you just said the 200,000 is for 2016.
We'll be short in 16 by 200,000.
No, he's saying the 200,000 that we're
Now you
short.
got me confused.
No, I thought it's short for next, for
It's short for next year.
It's actual
This is
money.
critical to understand.
This was the last year you had actual, we had
If
actual.
we spend our budget, there's $227,000 that we don't have.
The way government accounting looks at this is when you appropriate monies, they're spent. So you have to budget for those appropriations, as assuming they're gonna be spent,
Right,
okay?
But they're
So
spent
if you are gonna spend it, because they have the authority, the people who are given that budget, they have the authority to spend that unless you stop them, okay? Then you're gonna be short
So, I
227,000.
I think I understand it, which is basically, part of this is a matter of language, which
Yes.
is that once it's, what was the word you used?
Appropriated.
Appropriated, it's spent.
Right,
So it means it's been spent for 2016. But in
Well,
reality,
when we have-
you're actually spend, it's not really spent, it's been appropriated. It gets suspended as you go along in 2016.
And we may not spend it.
And when you look at.
my point is, if you don't mind me interrupting, I'm sorry, you need to take measures to make sure it doesn't get spent.
I agree.
I agree.
Because the money's not there.
It won't be, yes, it won't be,
If we spend the budget, the money's not there.
correct.
Now we're
Wait,
back in our
but no, you
Well,
guys, when you say
that's
the money,
correct.
the money's
Let's say that
not
loud.
Cash.
That is correct.
has been
Cash.
spent.
You know, say it louder.
Cash.
That's how
You turn around and say, no, 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 after he said, that's correct. You go, no,
He
no.
goes a little bit back and forth.
Yeah, because I think it is there.
This 227
Where?
is an accounting fiction to balance the budget.
That $227,000
in the
doesn't
bank.
exist.
It's not in the
Wait,
bank.
wait. Michael, is the money in the bank? Is there cash around?
As
the
of
bank?
12/31/2015, the money is there, yes.
Okay.
Now,
Can I just go back to what I
wait.
See?
Now, given that we've been going through this whole year, and we're at month 8, and we can't really know how much of it is still there, because we don't really know what budget versus what we've spent, are we in the process of spending it?
Yes.
I'm okay then for 2016.
I'm okay for 2016, but I tell you, our definition isn't the same as Michael's.
No, I understand that.
But what
Wait.
he's saying, if you go through your budget, what do you have on December 31st of 2016?
Zero.
No.
Now, January 1st, 2016, you have zero.
Because
Okay,
what he said on December 31st, 2015, the money was there.
Correct.
On January 1st was the money there.
No.
Because it's been appropriated.
It's been
That's
appropriated, but it hasn't
But
really been
you put
spent.
it
But is the
into
money
your
there? They
revenue.
Totally agree.
It's not there.
Which is why we're here today.
well, wait a minute, it's there in one reality and not there in the other reality.
Wait, don't be slow.
It's there in cash.
No.
It is there in cash.
No, if
You
you
put
spend
it in as
it,
revenue.
if you spend it, you don't have
It
it.
was like on January the 31st, or on January the 1st, it got dumped into our revenue stream, just like taxes do. So we're spending against it. And if we hit our budget of $1 million, then we will only be able to collect the next year what we tax. And our citizens will have to make up that $200,000 difference.
For
That's
2017.
2017.
$227,000 before the end of the year, you wouldn't have been able to write a check.
Correct.
Let me read something.
So the money's not there. If you can't write a check
You
on it,
guys
it's
are
not
really
there.
fighting over the wrong.
No,
Yeah, you-
Fighting over
I don't
language.
think so.
Sir.
Let me
Look at the cash.
I'm telling you, if you spend your budget $227,000 before the last check, the money's not
Because
there.
the
So you don't make
revenues you
payroll.
told your people to bring in aren't gonna be sufficient, because that's the way you set it up. We've set it up. So we could just stop worrying about appropriate and unappropriate and all the rest of that and simply say, we're running a $1 million operation on an $800,000 revenue stream.
Not yet.
And we fortunately had some appropriated money that will make up the difference, but next year we're gonna be dead.
Okay,
And next year's, the first time we're gonna have to pay somebody,
next year.
we don't have any money to do
Next
that
year.
because
Right.
as of January, what do you pay? Bi-weekly?
I think this has been confusing to me.
Money.
You actually have money for about 9 months because of property tax. You're good for 9 months.
Let me read this that we've sent out. The town board failed to amend the town supervisor's proposed budget for 2016. Therefore, by state law, that proposed budget automatically became 2016 budget. In this unamended budget, the general fund expenditure again exceeded revenues by over 200,000. However, with the fund balance at negative 786, there was no money to cover this over $250,000 deficit and balance. This is describing 2016 budget. This
Yeah.
was our explanation
Yes,
of what
because
happened.
if you spend that budget that's been appropriated, you won't have any money.
It says that the heading
You're
is
supposed to have money in the
2016
year.
budget not fully funded.
Right, you're supposed to, I think
You're
that's
supposed to
part
have
of the
money.
understanding, you're supposed to be, there's supposed to be, you're supposed to have money at the end of the
You're
year.
not supposed to spend all your money.
You're not supposed to
You're
spend
supposed to
it.
have that balance, which we don't have.
That
So,
balance
so
is our.
that's when we're broke.
Yeah, if you be using the analogy running it, you have to run an $800,000 government. The reality is that this year you have to run a $973,000 government on a $1.2 million budget. So your analogy is correct, but the real number is, the
Let's make that number.
the government this year needs to run on $973, because that's the real money.
That's the cash.
What's the real money?
What's real
It's
money?
cash, it's cash, it's cash,
We say
yes.
cash, Michael, we say cash.
Yes, it is cash.
You got the money from chips, from sales tax, and from property tax. And then maybe about 30.
That's DB though, don't,
Yes.
let's just stay
Oh,
on the
I
end.
did say sales tax.
Just
You
stay
got
on
it from
the
property tax and a little bit of state
It's
aid.
a chips too.
Yeah, so it's,
Property tax and a little bit of
it's
state aid.
property tax and fines and forfeitures and mortgage tax are your major revenues in the A fund. And it appears, from what I can tell, thanks in part to James' analysis, but also I went and I analyzed it with Tammy today. It looks like we may be able to have between $70,000 and $100,000 of excess fines. Maybe. That's the way it looks.
Run rate.
Okay? So, if we do have that, let's say we do, okay? Then if we can cut the rest, we have, so to fix, so if we get, let's just say we get 75 for sake of argument. Then if you take that 227 minus 75, we gotta come up with that difference.
Right.
And you gotta stop the spending
Right.
by that amount of money to be able to be even at the end of the year.
Right.
Okay? So then at the end of the year, you got zero again.
Right.
Okay? Then at the end of the year, you got zero. Now you got to do a budget,
Okay.
which we've historically taken 227 of fund balance to balance the budget.
We don't
so
have.
Either you reduce your expenditures or you increase your revenues.
Right.
Or both,
Right.
combos.
So
And
let's
again-
this is important. John, are you on?
Yeah, I'm following you still.
So in other words, 2016, we're going okay. We're gonna pay our bills. We may even come out a little ahead.
Maybe.
Yeah,
No,
well,
we're 150,000 short under that.
No, no.
No, because you have appropriations of 1.27 that people can spend unless you reduce those appropriations.
so Michael, are you on board with this?
Yeah,
It's
well,
slightly different than what you were explaining to me earlier, at least as I understood it.
No, I mean, here again, I think that Maria has tried from the time she talked to Mike 2 months ago to have a $973,000 budget this year.
Yes, absolutely.
And-
But all I want to
and-
know is
and-
are we in the hole 200,000 starting January 2016?
No,
Or does it
we're
start
minus
January
798 is where we are.
Yes.
As long as we do 973,000.
As long as you reduce your appropriations.
By 227.
Now, then you get to 2017, then what are you gonna do?
Well, we're gonna introduce a budget that comes in at $973,000.
So you gotta plan for that.
But we still have no fund balance.
Right.
And that means no
Another
mistakes.
issue. We gotta build that.
So if you set your goal, like, okay, I'm going to have a balanced budget, to borrow a word that's used too often, then your budget is 973,000 against the expected property tax of 615,000 to round off. And a whopping $359,000 from fines and forfeitures and state aid and user fees and yada, yada, yada. So there's, if you take the 359,000 and the 615,000, you come up to that 973. That's where all the money is. So now my expenditures equal my two sources of revenues in the A fund. And that's a balanced budget, but don't ask me for a dime because I don't have it, I'm broke.
Now, let's go beyond A, because we're a town that includes B and DA and DB.
Correct.
And we're actually budgeted deficits or shortfalls for each one of them. So we have a 247,000 shortfall for DB.
Correct.
So we'll have to do this process for all of our funds and to put all of our things in budget. Question for you, some of the budgets, however, have reserves still left. There's 500, 600, whatever in the DB. There's a lesser amount.
No, there's not that.
Just for the public, DB is highway.
And are we able to reconfigure the property taxes to lower them in one fund and raise them another to offset an imbalance?
Yes.
So without raising taxes, but sort of like you do with an air conditioner system that isn't one, you tweak it. So we could do that.
Correct. But again, I've been cautioning the towns that I represent. We've had very easy winters for the past 2 or 3 years. If you keep reducing your DB fund balance down to shrimpy little amounts, you're waiting for trouble because you gotta fix the roads. You gotta plow the roads, you gotta fix them, you gotta make them drivable, or you're gonna get sued.
Right. And I wasn't necessarily saying we're going to do that. I don't know what else we do.
So that's why I totally understand where you're coming from,
I just wanted to know.
but I caution people about doing it.
And there's a total of rounding off, there's a total of $1.6 million that's raised by property tax.
Right.
And so, Jim, you can mix and match out however you want when you create your new budget.
So you said the A was 800, so is the rest
No,
of that,
no.
the 800, the 1.6, is that?
A property tax is 615.
Oh, it's 650, I'm sorry.
And
So that would be a
and
little less
highway-
than $1 million for the highway.
a highway is 672.
Oh, so there's two other left.
Well, there's this lovely thing that we talk about sometimes called the DA fund, which is bridges and what's not like that. That's got 240,000.
I thought it was more than this.
So there's $250,000 in DA, and then it's basically the 2/3 of a million in the other two funds. And so out of that 1.6 million, you could take a little bit out of what? And as Mike says, okay, so you decide you're not going to use 672,000 for highway. Now the problem with highway is they also spent more out of their unappropriated reserve. Now it's not called the 917 over there, it's called the 914 over there. And the 914 over there, it looks like if the sales tax does what it's supposed to do, they're still short $80,000 on their reserve. So where at the end of the year, if the budget was running in A, it would be short 227. At the end of the year, if they run the budget in the highway, it looks like it's going to be down by 80,000. Now, if you look back at the AUD as they closed out the DB fund, which is on another page, it's like 440,000 in DB. It'll be 80,000 less than that.
Is that using budget?
Yeah.
Yes.
That's
There's
using money.
71,000 over on vehicle in one of the codes, so if they were to go covenant budget, there'll be 71 more.
Right.
So tell me, let's talk about DB for a second. Sales tax has been historically budgeted at a number significantly lower than what actually comes in.
Mhm.
What is the strategy of that?
That's an old time way that the supervisors used to balance their budget by using, they under budgeted revenue in sales tax and used that estimated under budget to appropriate fund balance. It's been an age-old practice
Yeah.
in New York State.
I miss it.
And
So, I mean, I miss the logic of it.
There is no logic to it,
Because obviously the sales taxes are coming in much higher.
because they were always worried that sales tax wouldn't come in at those numbers. But what they failed to remember is if they don't come in at those numbers, that makes it even worse.
Right.
Because you're not paying back your fund balance.
Right.
Now, again, the fund balance, I'm just looking here on page 26 of the AUD. 448,266 was there on December 31st of 2015. And they, of course, only appropriated about $440-some thousand in sales tax, and that's like a lot off of 70.
Oh, there's a quarter up.
Yeah. And so
That's a big quarter.
if the sales tax comes back as it looks, which is a little bit above estimate, but it would still leave them about $80,000 short of repaying the reserve.
Correct.
What page are you on now? Oh,
That's all on page 26 of the AUD.
He's looking at the DB, you're looking at the DB balance sheet.
The DB, and so again, the key word, and for everyone, we use the word fund balance, but fund balance has more than 4 meanings. In this budget, it has 4 meanings. The one that counts is the unappropriated fund balance. That's the number.
And that's the 448,266.
Yeah.
Correct.
Because the 711 is not
Sorry.
available. The 448 is the stuff that's.
So, and what you were just saying is that we actually have, given that we know sales tax is going to be much higher by 150, is we actually have 448 plus 150.
No, because you could spend, if you spend your appropriations,
Well,
200 and whatever it is, $40,000 more.
we've got a 246 deficit that's been appropriated,
Yeah.
but we know it's going to be much less than that.
So now you have
About
an
$80,000
$80,000 problem.
Okay,
Right.
I think we're saying
So
the
the
same
I
thing.
think you're saying the
The
same.
sales tax is going to be 80,000 short of putting the 246 back.
Right.
Before you got here, I was just telling Michael, one of the other towns that I work with, the highway superintendent says, I've saved $130,000 the last 2 years. I want to be able to use that for equipment. I said, you didn't save $130,000. He said, yes, I did. My appropriations were this. I spent $130,000 less. I said, but sorry, they appropriated $250,000 the year before and $270,000 last year. So you did not save $130,000. You're actually in the hole $120,000. And he can't understand it. He's like, what are you talking about? They told me I could spend this, and I didn't spend it. That should be mine. It's not. I'm sorry.
Well, I can
So that's why I'm here today, because I don't want you guys to be in that situation.
Budget carefully.
Well, at the end of the day, you have to budget carefully, and what do you do about increased revenues? Because again, if we put together a $973,000 budget, which is probably a reality budget, we still don't have any money.
Right.
And so if the state controller would like us to have somewhere between 8 and 12% into this 917 account. And so quickly on $1 million for head math instead of 973, I need $120,000 to make 12%.
And that's just the A fund.
Just the
This
A
is
fund.
just-
Where is, I mean, we've been going through the budget. Where's $120,000 worth of cuts? And where's
And wait till your health insurance bill comes
They're all
out.
sitting out there.
And even if you have $60,000 in cuts and $60,000 in new revenues, there's 120. Where is it? There's not 60,000 in new revenues. There's not 60, I mean, again, if you're trying to raise just in that fund, 1% is going to give you $10,000. Actually, I said that wrong. 1% is going to give you $67,000.
1% of what?
No,
I'm sorry.
I'm off. 1% increase in sales tax would give you 6,000,
60,000.
Not sales tax.
60,000.
Property tax, you mean.
property tax, I'm sorry.
Property
Yeah,
tax,
$6,000
Yeah, we give you, $6,155.
for the A fund.
right.
So if 1% gives you 6,000 and we're going after, say, 60,000, that's a 10% property tax increase.
Mhm.
So to get $60,000 in the A fund is a 10% property tax increase. So imagine this. Reality budget, we run 2017 government exactly like this year's government, and health insurance doesn't go up, nothing else goes up. So repeat, you run a government on $973,000, and you want to have a $120,000 reserve. Then you're going to have to cut $60,000 in program and raise property tax by 10%. I don't know where there's $60,000 in program to cut. I mean, it might be there, but it's going to hurt in the A fund. Because you already have cut, just get down to the 973,000 reality budget.
But
Well, I don't know about that.
That's 5% of the A fund appropriations.
again, in the DB fund, you got $180,000 of debt service because you got bands that you're paying off over 5 years.
Let's talk about that. When do they expire?
There's a schedule in the that says when they expire.
So they expire after
2018.
2018 and 19.
But every year, they roll over. So you could go out and do a long-term bond to refinance those and reduce your debt service to a manageable amount over a period that is commensurate with the assets that you use that money to purchase.
Wait, let's say that so we're paying 170 years of principal
Yes,
and 22,000 of interest
Correct.
each year.
Mhm.
And my understanding is at the end of the expiration, the balance is zero.
correct.
So why do we have to roll it over for another 600,000 of debt?
Well, if you,
I was thinking that we would free up $200,000
in
of
2020,
annualized,
in 2020.
But you're always
starting in
going
2019.
to have equipment replacement costs. though.
Right.
Well, do we have to buy it?
Well, that's a
That's
good
different
question.
issue.
So what's best practice about that? Are there towns that lease equipment and have better?
I wouldn't
cash
lease
flow?
equipment because when you lease equipment, the embedded interest rate's like 6.5%, 7%. So that's crazy.
The money's cheaper.
So what I would do is I would go out and bond for whatever you're paying for. You look at the useful life, maybe the better way to do it is, this is public information, so I can share it. We put together a schedule, a capital plan for the town of Ghent. Okay? We prioritized all the stuff that they needed, and then we talked about bonding it over the useful life of those pieces of equipment that we're buying,
So
Okay.
this type of equipment is.
So this is all of their trucks and vehicles,
that they need to
the
buy,
year that they need to buy.
and over the next 10 years.
Do we have an inventory of all the vehicles and trucks that we
Yes.
have?
Yes.
Oh,
Joe has that.
And so we know which ones are gonna die soon and what we need.
Yes.
So that might be the best way to,
Well, that's what I mentioned to Tammy and Joe, that they should try to put something like this together. Then we can sit down at budget time, and we can talk about whether the assets that we have already bonded or banned can be bonded for a longer period of time, and therefore cut down the immediate appropriations of the DB fund, yet not hurting their fund balance situation, and then pass that money. We save it in taxes in the DB fund, and you pass it over to the A fund, so you can take care of this stuff.
And there's a a modest cost with reissuing those bonds.
Well, it'll be a savings,
They'll
because you're
expire.
gonna pay less interest,
Yeah.
because you're gonna put it over a longer period of
Right.
time.
Now, just a quick aside, also a little bit for the public, that on the aspect of leasing things like trucks, therefore the whole value of the truck, and you own the truck at the end of the lease with a buck. So there's no residual lease, it's not like a balloon thing.
It's
So-
just
so-
a finance
so-
thing.
And so, as Mike is saying, it looks like, well, okay, I'm gonna lease this over time, spread out my costs, that's a really nice thing, and I own the thing at the end of the financing. But same thing happens when you bond. And so how much are you paying in interest on the bond? How much are you paying on the embedded interest on the
you're saying it's
lease?
much less on the bond.
That's
You
right.
better be direct about it.
You get the same, end it's the same, except where you're doing the financing.
Is
instead
he
of
using the
somebody
bond
else.
over the life of the truck?
Excuse me?
Do you, if the truck has a life of 6 years, do you do the bond for 6 years?
Well,
You
you'd have to
can't
look,
exceed it.
you look at the assets that are being financed and their useful life, because the banks aren't gonna give you the money unless you're doing it for that particular purpose, okay? So that's what I suggest we do in the DB fund. We sit down, we put a capital budget together for the next 10 years. Now, I agree, 5, 6, 7, 8, 9, 10 years are probably pie in the sky because we don't know. But at least put something down there, you know, so that you can plan for it. So that's one way we can maybe fix this problem. The other thing is when you have a band, you have to renew it every year. So you have to pay professionals to do that. Where a bond, you only do it once.
The 3-year bans have to be renewed each year?
Yeah, they have to be renewed each year. So you have to pay a professional bond counsel to do that. So that costs money.
Bands are just.
Bands should be used for, here's a good example. If you were to build a new town hall and you needed $150,000 of soft costs to build a new town hall, and you were going to build that into the bond and or a grant or whatever you're going to get, and it will pay back that band after a year, then you use a band. But to use a band to finance a truck that you're going to have for 10 years, in my opinion, is not the proper way to do it.
You're right, it should have been capitalized.
Yep.
No question.
Same with our building at Crown Park. Never should have been paid for. We should have bonded that.
What was the cost of that building?
And if you don't do it, and 5 years from now, the interest rates are back to 7, 8%, then you're really going to be kicking yourself.
Right.
Nobody likes debt, don't get me wrong. I'm not saying that you go into debt to fund operations. I'm not saying that at all. What I'm saying is, if you need to buy assets that have a useful life for more than 1 year, you need to look at those assets, their useful life, and spread that cost over that same lifetime. Because then, when they're paid for, assuming that the useful life is the same as what you paid for it, when you go to buy some new ones, you'll have that borrowing ability to be able to buy some new ones.
Let's shift gears. Let's talk about the fire companies that support the town.
Mhm.
They typically submit a budget number, and we put it into our tax thing, and it sort of passes through. We don't really deliberate on it, we don't discuss it, we don't.
You should.
Well, let me talk to the board members. How do the fire companies, their budget I think is about 400-something thousand, including the North Chatham. Are there opportunities for savings?
There could be. You should sit down with them and talk to them.
They're planning to invite them to the town board meeting.
I mean, the chiefs come in and make a pro forma presentation, right? But
Are there metrics that one could compare? I mean, how do you compare a fire? How could you say, gee, you're really operating efficiently? You've got 20 fires per man or something like that. What do you?
Well, I had one town that did just that. They went to him and said, "You have more cash than the town. Why are we giving you all this?" They wanted a 20% increase in their budget. Why were we going to do that? He didn't get elected the next year.
it's certainly touchy subject.
It's a problem.
I'm just telling you the reality of the situation. I'm not saying it's not a problem. I'm just telling you the reality of the
So
situation.
then you need someone who doesn't care about your name.
And the new guy will put it all back.
Let's say that we came up with 10,000 of savings. Where would it go? Could we put it to Fund A?
You could put it to whatever area of the town budget you choose.
In fire?
No, you would take it out of fire.
I know, but you can put it wherever you choose.
Whatever you choose.
So do we need any, I don't think we've ever actually, do we bring in our fire departments and make them go through their budget line by line and say, we don't need that? we don't need that?
Yes and no. Bring them in, yes. Could.
So I wonder if we know how to do that. I mean, where to look. Haven, do you think it's, that we
No,
would
just,
know?
I'm laughing at humanity, I'm sorry.
Yeah. I mean, talking about fire department having more money than the town, Tri-Village is in that situation. They get half of the fire allocation.
Yeah, a little over half, actually.
Maybe that's a project for someone to look at, to compare our town fire expenses relative to neighboring towns' fire expenses. And what would you do, number of houses per dollar?
but I'm sure there's some metrics you
Yeah,
can use.
it's difficult.
I'm saying it's true, it's pretty rough.
You know, and again, don't get me wrong, I don't want it to make it sound like I don't appreciate the volunteer people and what
Right.
they do. They provide us a terrific service,
Right,
but still, they.
right, you don't want them not to come.
Right.
Well, also, if you were to try to fund this on
I'll just
a
increase my
public
insurance.
fire department, like a city
Oh,
has
pay,
to,
forget it.
forget it.
Yeah,
That'd
right,
be twice the budget.
yeah,
This wouldn't even pay their medical.
right.
Emergency services, same thing.
No, that's a chargeback. That's
From the
different.
county.
So let's talk about that, and that's a big number too.
Chatham doesn't participate.
Okay, so it's irrelevant. I thought we actually.
No,
you do.
Chatham chose.
Rescue Squad is not involved in the payback system to the county. It's totally different. All the other rescue squads in the county are part of it. Chatham Rescue Squad is running a different type of program.
There's still a chargeback for ambulance
There's
services.
a chargeback. It's 79,000, I think, that we were giving them. It doesn't compare to the same way we're doing the other rescue squads. Where the county.
131, yeah.
Yeah,
Yeah, it's going up.
you did some research on this. Chatham Town has the third,
I didn't bring that with
Highest.
me, unfortunately. but
Canaan's highest, Copac was second highest.
I can't remember, Michael, off the top of my head. I wish I would have brought it. I didn't bring it with me.
We went through this last year, Henry, about, we seem to be way out of line in comparison to the other towns.
Yes.
Up or low?
Up.
We're on.
Okay, so that's an
We
opportunity.
were basically,
Well,
we're
but again-
basically funding other towns.
But again, you gotta remember, and I'm not trying to plug anything with the rescue squads, but when the more rural you get, the more expensive it is because you gotta run these rigs a lot more because you have to be within a 4-minute response time in order to be able to save somebody's life. So they have to buy equipment on a much more quicker basis because
Beat it up.
they beat the heck out of this equipment. And this equipment is $500,000 a rig.
And it's also a paid service now. You're not, every one of the rescue squads have volunteer on them. They're no longer volunteer. They may have 5, 6 volunteers.
Right. They're
You have
usually
paid-
drivers,
You have
yeah.
a paid paramedic and a paid
Yeah.
EMT that are on these ambulances.
Yeah.
You have insurance that have to be paid to each of these individuals. So there's an awful lot. There's workman's comp, it's a
There's a
business
lot.
now for these rescue squads. It's no
Absolutely.
longer like it was done for many years.
And I represent the
It's a business like.
Greenport
like
Rescue
Rockland.
Squad, so I know how difficult it is for them. But
Trying not
that doesn't
to.
mean that you don't have to review this, because it's part of, this is
Well,
part of your
yes,
purview.
so everyone understands is that I think the town board has a duty to control the cost there because the cost is paid by the town of Chatham taxpayers, the property taxpayers, but it's not on this budget.
It's not on the ABDAD.
No, it's not.
But
It's on the county's
But
budget,
it's part of our
our-
tax rate.
It is.
Okay.
No, not our rate. It goes through all the counties.
Well, it's still the residents of
Yeah.
the town.
So
But it's on the
resident-
county bill.
Oh.
But again,
The reason they did that was because it was easier to balance the county budget with those increases than the town budgets.
So if we were to make any tweaks or anything, it wouldn't show up on this budget?
No,
It
it would
show
have
up on-
nothing to do with this.
Okay.
Yeah, imagine this, that everybody's trying to keep within inside this .68 tax cap. In the old days, like 3 years ago, it was 2%. Everybody's trying to keep it within 2%. If all the rescue squads raised it by 2%, then that would affect the county appropriations, their cap, by 2%, so they would be okay. But now it's down to .68. And so Chatham agrees to a 2.5% increase. Ghent agrees to a 2.5% increase. So does Canaan, 4 or 5 others. That starts to affect the county. It doesn't affect us. So it's easy for a town to say, make it 10%, who cares? The county cares after a while. If only one town does a big deal,
Well-
2 towns do a big deal.
After a while, the residents are gonna care.
Yeah, because you're gonna see a
Okay.
173 go up.
But that's beyond the scope of this.
This,
Well,
correct.
come August 24th, 10 o'clock, there will be a meeting of all 5 towns that Michael mentioned. And we'll be talking with the Chatham Rescue Squad as a collective group,
But it's a rescue squad meeting, not a fire meeting.
rescue squad.
And they have almost routinely, I hate to say the word routine, their practice has been to grow their budget 2.5% year after year.
That's
And
not-
I couldn't comment on that, I don't know that
I
to
look
be a
back.
fact, but if you say that, then that's what it is.
What about, I'll just throw out another one, another item that goes through without any, the North Chatham Library.
Untouchable.
Yeah.
Okay.
It's like a fire district.
Well, first of all, that's a little different. I know that's strange, you find that strange. There was actually a referendum for that the library came to the town, said, we need this amount of money. You guys, as a town board, put it out for bid, for a vote, and the taxpayers said yes. So that's why it is what it is.
So it's like a library district, so it's.
Yeah.
Happens all over the states.
Yep.
Chatham
They always say
Library,
yes.
but it's not that.
Vice President.
Schools and libraries, don't vote against the budget or you're
And it's again.
communist.
And that's why you see on the adopted budget, those are just hash marks. The L fund exists, but it doesn't have any funding, because they collect it directly.
I collected questions from other people, and one that was raised was, what are the interfund receivables and payables? Is that anything that's of interest?
Well, they are what they are. They're interfund, they're temporary borrowings
Okay.
from the different funds. And if you remember, when I met at the public meeting for the AED issuance, that I was concerned at first that the receivables in the A and DD fund for the bridge project may not be collectible.
Yeah.
And it appears that they are collectible. So that's why I kept them on the budget, because if they weren't collectible, then you'd have to take them against fund balance and you'd be even worse.
Right. Tell us about the balance sheet H.
That's
Is
the
there a fund
capital.
H?
That's the capital.
And how is that, I mean, so how does that operate simply?
Capital fund is used to account for capital projects.
Is there money in it now?
There is some money in it now, yes, because we have gotten reimbursed from the state for requests for payment. Once we get that money in, we're supposed to pay back the other funds.
So I show at the end of 2015, we have $218,200 in assets. Is that the amount, you're saying that that amount is
In
there
cash.
ready
That's
to
in
be,
cash,
to
yeah.
pay for something?
It could either be used to pay for further expenditures on the project, or to be combined with other monies coming back to pay back the
Do
the
we
funds.
know, let me ask it another way, is that money available for a new truck or something like that, or is it
No.
already appropriated?
It's already appropriated to that project,
To what project?
to the bridge project.
Oh, okay, so that's part of the bridge project.
Yes.
And it's just waiting for what, a bill?
Waiting for the state to approve all of those expenditures. So at the end of the project, if your budget, the monies that you received, equals the expenditures that you expended, you have zero cash in the capital fund.
Right.
We've put out $250,000 worth of the town's money up front, okay, to help fund this project in anticipation of when the project is finished and approved by the state, that money is already included in that budget and will be given back to the town, which in turn will give back that money to the funds that it came from originally.
The bond anticipation notes are in that as a liability.
That's just because that's the way governmental accounting principles require it.
And so subtracting the bond anticipation notes from the 218, the fund has a negative balance of 653.
Correct, because again, the theory is when you have a ban, it's supposed to be short-term. It's only supposed to be there for a couple of years. And then you will take that bonded money or granted money and receive it into the capital fund and pay off those bans. That's what the theory behind the ban is supposed to be. Unfortunately, for the town of Chatham, you didn't use it that way. You used it as a funding mechanism.
So that number will go down in chunks of 180 each year until they expire.
Unless you refinance it, yes.
And then when let's say we refinance with bonds, where would those show up? In the same thing, they'll show up on the,
No, they show up in the long-term debt fund.
which fund is that? It's the long-term debt fund.
Yeah, it's, I don't know that it has a
Okay.
letter.
Yeah, we
It's
have
W, yeah, it's W.
Okay.
So, yes, that's where it would show up.
You good?
No,
Yeah, how about some other people?
the aid,
These are good questions. I mean, don't discount the fact that you're asking these questions, because these are
I'm
good
not.
questions. This is not, it's very difficult for people who come from the private sector into government and try to understand this, because in the private sector, you look at a balance sheet and a profit and loss, and it's a balance sheet and a profit and loss. That's not the case here. And that's why when you commingle funds, like has been done here and other places, the board gets these reports that says, I got $1 million in cash, and everybody's like, well, that may not be good. It's good you got $1 million in cash, but it may be needed to use for things that you don't want to use it for. And that's when you get into trouble.
Do you participate in town meetings? You don't participate in monthly town meetings, you participate when you're asked to for a special
Correct.
project.
Mhm.
So you really don't know how towns operate, on a regular basis.
Sure, I do. I'm
Well, for
there.
example, the report that you produce each month called the supervisor's report,
Mhm.
what would be like the best way to use that? How would a model town use that report as a tool to manage its expenses, update its forecasts, proactively manage its manager's use of money?
Okay, good question. This report was created by me,
I think it's very good.
so I take a lot of ownership in this, because it does several things. Number one, it
June,
tells,
July?
yep, it tells the board and the public, which is more important in my opinion, okay, what money you have in the bank, where it's been received, where it's been spent, and on top of it, it gives you a balance sheet, it gives you a monthly income and expense, and it gives you a year-to-date budget versus actual.
Step us through it, in a summary fashion, just for,
So the first page shows all of the receipts of the town for the month of July. So as you can see, it's
Sales
got
tax.
sales tax, it's got fines and forfeitures.
question about sales tax, that comes in quarterly, the fourth quarter will come in January, will Tammy,
We'll book a receivable. One of the receivables on the balance sheet last year was called due from other governments. That's what that is, okay? Then it goes to show you what the disbursements were. You have your payrolls, you have your abstracts, you have your retirement payment. and-
what does abstract mean? Generally abstract, is it all bills for A?
Abstracts are the municipal term for your disbursements, okay? Now, again, just a side note on that, there are some reoccurring bills that you'll see here, not so much in the town of Chatham, but get paid without going to abstract. I tried to tell my towns to put as many bills on the abstract, even if you have to pay it up front. Just have it on the abstract so that the board members can see it, approve it, and it's all on the up and up. Some towns, like if they have their telephone bill or their NIMO bill or whatever, they don't put them on the abstract, they just pay them, which to me is a bad practice. That's not happening here. Okay, so that's a good thing. So anyway, you'll see some of these other payments that aren't part of the abstract, which is your retirement and your United Health.
It looks like a miscellaneous retirement. I mean, it's
Right.
so small.
Right, I think it's withholding is what it is, I think, actually. So that's the first page. So that shows you.
so most of the state retirement is paid in November if you got the cash to pay.
Right. So you'll see that it starts with the beginning cash balance, all the activity for the month, and the ending cash balance. Which that ending cash balance, if it's done correctly, will tie into your balance sheet every single time.
So that's the, oh, I see, yes.
And we also do it on a cash basis so that if anybody wanted to say, well, show me where that money is, we list it on the next page so that you could go right to the bank statement and say, there's where the money is.
Yeah,
In all these different accounts.
I've heard a complaint that, oh my God, now we have all these new savings accounts, and we've got checking and savings accounts for every single account. What a hassle. It's just something that you did.
Yes.
This is,
That's what we should have got.
Absolutely. And that's because people will spend money in funds that they don't realize they're spending if you commingle all the monies together.
Okay.
And the controller's office will say, you don't have to do this. Because if you have a proper accounting system, you don't have to do this. I totally agree. However, 9 out of 10 times I go to places that don't have a proper accounting system, and therefore, this is what happens. That way, again, the public, you can tell the public, here's all our money, and here's where it is.
So, just we've been talking about A, general fund A savings is 617,000 as of the end of July. And that includes, oh, that's just our
That's just your
operating.
cash.
Yeah,
That's your
yeah.
cash.
That's our checking.
Because you've received all your tax money.
Yes.
I was gonna say.
Yeah. Yep.
Every month she transfers money out of the savings into routine A.
To the
So
ca-
the checks are written out of the trust and agency. Look how the trust and agency is a low number, and it goes zero quite often.
So it's a working kind of.
Yeah, and so you just constantly are transferring out of your savings where you get a little more interest on it.
Okay.
Okay?
Do we need
So
to
that-
understand QuickBooks? I mean, why is QuickBooks down here?
I'm sorry?
The bottom half of the page.
Because we want to balance it, because the QuickBooks is on an accrual basis, and this is on a cash basis. So we want to do a cash to accrual, so that it would, if a member of the public says, well, wait a minute, you guys tell me that you got $1.6 million in cash, but you only have $1.3 million in fund balance, how come? That's why. Okay, so then the next page, 1 and 2 and 3 are your balance sheets, every month. So that you can not only know what the cash is and balance to the cash, but you can also see what funds you have in receivables, what payables you might have, and what your fund balance is.
I think most people glaze over this. Is this something that we really shouldn't glaze over?
You should not glaze over it, no. And then the next 2 pages is your monthly receipts and disbursement page. And the next 4 pages are your profit and loss budget versus actual reported.
The budget category is for the full year, not
Yes.
prorated.
There's a page, can you see page numbers on yours? I'm kind of truncated. I'm looking for the one that has the total liabilities.
Total liabilities?
It's page what?
That's
Page 3. It's called page 3 on this one.
Of what report?
Page 3 of the balance sheet. Yeah.
Page 3 of the balance sheet. I just want to do the 914s, 917s.
Is 227.
Okay, so that's the 227.
Yeah, so like if you look, again, Bob and I are always talking about this A917. You see how it sits there as a constant negative 785.88? Because that's where it was on January 1st, and that's where it's going to stay until December 31st.
Correct.
That number will always be 785.88.
And then what will happen on December 31st is the actual shortfall
Or surplus.
or surplus.
Will be rolled into that account.
And then the difference would be theoretically saved.
Well,
Not
see-
spent.
If you don't use it to balance your budget, yes.
And then you
To
see,
carry over to next year.
you see the 914 sitting immediately above that number. That's that roll face 227.
Right, so that's really critical that's the most important thing I learned tonight, is that for 2016, that 227 that's been appropriated is paying for 2016, except for $787.86, if we spent the 227.
Now,
Correct.
if you look.
That was different than I had understood up to
Okay,
now.
well, I'm glad now you understand.
And John, you get it too.
Yeah, I get it.
But we don't have the 227 to spend.
Well,
You,
theoretically.
see, it's hard to answer that question, because you do and you don't.
Right.
You do, based on the appropriations that you put together in 2016.
Can I write a check for $227,000?
If it
If
pays for one of these
you
things,
pays
you're
for all
right.
those operations, appropriations, yes.
But there might be a time in October where there will be money.
Is
Correct.
the money in the checking account to write a check for, will?
Right now it is, yes.
Right,
But
but
maybe
not
not
right
right
now,
now.
but the end of the year, if the budget comes in exactly as budgeted, will there be
Yes,
$227,000?
but then as of January 1st, you won't have any
No,
money.
I just want to know for this year.
Yes.
Okay, that's, That's good.
That wasn't the way we, I don't think any of us understood it on day one.
Exactly.
It's been developing into this. So it has some relationship to one of the
But
questions
again-
we asked earlier today, which is, are we in a
Yes.
budget crisis or not? Or are we just in a really bad spot?
Exactly.
Well, you're in a budget crisis if you don't cut your expenses.
If you don't do something, yes.
Oh, yeah,
Yeah.
no question about it.
Now, but also, just not to walk away from A, because things get a little bit different when you look in DA and DB. In DA and DB, they don't use 970, they use 950, and it actually has a...
Are you in DD or DA?
Your choice.
Let's do DA.
So you'll see, there again is an assign appropriated and an assign unappropriated. So the assign appropriated is the money that they designated out of reserve. And the 915 is the reserve that's remaining behind from that.
And the amount for, you're looking at 2015 or?
Right. So if you look at DA 915,
Yeah.
as they went into the beginning of the year, there was $49,000 in the mattress.
Right.
They took 17,000.
17 is the amount appropriated for the 2016 budget.
So the number used to be, help me with my head now, 63, 66.
66.5, yeah.
So at one time there was number 65. They took 17 and left behind 49.
Right.
And so if you go down to DB 914, at one time there was, again, help me with my math, it was close to 700,000. They took 246, leaving 448 behind.
Of which we know they won't need 246.
Because the sales tax is understated.
Right.
But you could also take some of that sales tax and use it for the B fund if you so choose. Because that's part of,
Could we do that this year or starting next year?
you can do that anytime that you feel it's appropriate.
In B.
And
It'd
B,
be, but not in there.
correct.
And now again, B pays for, B is
Zoning,
planning, zoning,
right.
code enforcement.
But again, if you take that away from DB, then you're leaving DB short, so you just have to keep that in mind. But you can use it.
On a percentage basis, DB is running the best in terms of its.
Well, again, if you were to look at its budget of, get that on the screen up here.
What's the percentage?
Yeah, the percentage. The DB budget is 1.6 million. So if you wanted to be at 10%, you'd have 162,000. Yeah, I said it right, 162,000.
Well, so there's another issue. So we need to raise reserve funds for A, B, let's just say A. Let's just say A.
All of the above.
But we can't shift DB reserves to,
No.
Yeah,
it has to be.
But again, if you look at targets of what has to be done for the 2017 budget to get a reserve there for us, again, in DB, 10% would be 162,000. 20% would be
320.
320. That's probably about where it's at right now after the 80,000 doesn't get paid back. Now, some people might say 20% is good. Yeah, Mike Bushi, how much you want there? Do you like 40%? 50%?
I said 50, I say 50. They never get there, but, well, some do, but very few do.
So the percentage of our DB is what, 35?
Yeah, I was like,
And what you would do is you do it over 5 years or 10 years.
Right.
except for it's like the 1 in 100-year flood. If it happens next year, ouch.
Right. Yeah, okay.
That's why this is so important, this capital budget, because that's the big money.
So I think a lot of focus has to be built on getting that highway reserve up and up, without going to tax. That means
Do we have,
allocated.
can we do our own capital?
I'm sure Tammy, with our help, can do it, sure.
Already got it. She's already got it. It's already been done a few years ago.
Good, then maybe we should share it.
If it was done, it wasn't shared with me.
Yeah, it's been done several years ago.
So then, if she would share that with me, that would be
I assume
great.
it's updated, then it's updated as things
Assuming
come
that
along.
the town highway and their department does. I mean, we don't.
I mean, knowing
see it.
Joe, he probably does. The problem is he just doesn't we don't incorporate that into the budget process, that's the problem.
But it
He
probably
incorporates
should.
it in his budget,
Yeah.
not what we say.
Right. But again, Joe could be thinking, I'm saving $100,000 a year, and he's not because of this fund balance issue that we're talking
And
about.
that thought's there.
Yeah. But Joe's smarter than that. I've worked with Joe before, he knows. But he's one of few that do, though, unfortunately. And not that they're not good people, they are. They're highway people, they're not book people. Joe happens to be both, partially because he has Tammy to help him.
Again, that common denominator is Tammy.
That's right.
Yep. And in Claverick, the guy has a former accountant that's his bookkeeper, and they're always in good shape because he knows to the penny what he's spending every single month. And he knows when they tell, when the town board tells him we're cutting this, it's like, no, you're not, because here's what we got, and he knows exactly what he has to pay for. So, I mean, sharing information is how this process needs to work.
Now, one of the things that we need to do is to give to each function their expenditures on a monthly basis. This is what your budget is, this is what you spend. We have here the total, but now it needs to be broken down and sent back.
Yeah, you can do it that
Just
way.
strip them out, they're all like those.
Most of them are pretty much, the majority of the expenditures, especially in the A fund, is wages. It's, personnel costs. So that doesn't really change month to month to month. So you can project that out pretty easily.
But we've been operating on the 3-digit breakdown of purpose codes with Pat Sinkotsky over in Catskill now for a year. And so every time we have our monthly statements, we have 3-digit breakdowns, and we really know. Now, quickly, you just do a scan, in fact, I did this afternoon, you just do an eye scan. Right now, I want to see the number 56%. That means I'm
7 months.
yeah, I'm that far through the year. Now, sometimes I'll see 0, and I go, why is that? Oh, well, that expenditure comes in October. Or I see 100%, oh, well, that expenditure came all the way up front. But then when I see something and it doesn't look like that, that's an alarm. So that's just the quick through. And then you want to carve out some time. I know initially Nicole from your staff came over and sat down with the board for the first 2 or 3 meetings and took them through that process. Saying, see, here's what's happening to you. Now, it's very vague in March, April, May. It starts to mean a whole lot more to you now. But looking at, if you can track through month to month with the 3-digit purpose code, you shouldn't have too many surprises.
A question about our time frame. I mean, it's pretty clear what we need to, what our task is in terms of 2017. What's the time frame that we have to start putting together this combination? That we have to come up with a budget and an amount and how we're going to meet it.
September 20th.
So that's a month away.
And the thing that we've been concentrating on is what kind of money are we going to save and where. But we haven't even started looking at the revenue side.
Right.
And from what I hear that's been discussed, since I've gotten involved with this, is that the way that the process worked was, I want to say this, I don't mean it as cavalier as it sounds, but that there's a fairly complicated process which people just manipulated, moving things around without ever standing back and saying, what do we have to do with revenues? That was enabled by the fact that evidently there was a significant amount of money that they could take, $250,000 or $220,000, and I'm sure the taxpayers appreciated that because that would be the alternative.
Right.
So I think we need to stand back and say, from the side of the revenue setting side, we as a board, the board should not be manipulating the revenues of taxes. They should not be.
You mean like the sales tax?
The sales tax. They should not be thinking we can move money around if we need to. We should be budgeting and revenuing for the codes that we have and the process that the government expects of us. And then we can sit down and honestly say to our taxpayers, here's how this money comes about, here's where it comes from, here's what we need from each of these categories, this is what we're gonna budget, and we need a cushion, and any well-run business has a certain amount of money that we have to keep aside so that when we run into a rainy or a snowy day. So whatever that is, we've got to put the 10% on top of it and whatever, and we know where that money's going to come from. And that's why I think most of these people are sitting here, is they're wondering what's going to happen to the revenues that they're going to have to produce to get us out of this crisis, which doesn't sound so much like the crisis that I originally heard, but is still an issue.
Where do you come up with 120,000?
That's the crisis part that we're all dithering around on what 18th of a code is going to save $16, when we really should be looking at the revenue side and giving our taxpayers an early look at what the changes are going to have.
Well, I also think we should be looking at the expense side as well.
We've looked at the expense side forever, and we should continue that, but nobody has looked at the revenue side, and we've already got.
Yes.
We still have to finalize, that's not controllable.
Right, Ava, we can look at it, seriously, just give me 2.5 minutes maybe. There's only 2 sources of money for the A fund. Property tax and
a compendium of things.
and fines and forfeitures. Those are the 2 buckets.
And mortgage tax.
And mortgage tax. So if you look at less estimated, so I'm looking here on the adopted budget. These are real numbers, actually. They have 359,000. So just head math, let's call it 360,000. That is from mortgage, fines and forfeitures, and a small, maybe 40,000 of state aid. So 360. That money will probably be the same money next year, probably. They've gone to the taxpayers, us folks, for 615,000. Now, if you go to the taxpayers for more than 615, you have to break the tax cap, because tax capital is only going to give us 6.68%.
Michael, last year it was 630. 2015, the taxes were 630, and then it was reduced to 615. Did we cut them?
Well, no, I mean, the taxes are the taxes. If they raise 600, that number is how much you actually go out and raise. That's your appropriation.
And last year, 2015,
That's levy.
was 630.
Okay, yeah, so levy for 16 was 615,000. I remember, let's call it 6/8, 1%. 1% gives you a whopping $6,000.
Lower tax cap.
$6,000 without breaking the cap. So if you know you're going to have $615,000 from the property tax and $360,000 from the other 3 sources, that tells you your revenue. And you can't bring that other part up. The fine, forfeiture, state aid, mortgage tax. I mean, maybe mortgage tax gets a little bit more robust. It's been flat for a long, long time. Maybe fines and forfeitures go up a little bit. That's it. Property tax, you have to go to the people. But even if you did 10%, that's going to give you $60,000. And if you want to have that minimal reserve, you need $60,000. If you want to have an operational reserve, you need $120,000. So revenues in A is real simple to understand. Now, I hate to say it's real simple to understand also over in highway. They just throw in another thing called sales tax. And it is what it is. There's nothing we can do to make sales tax
The only
more
thing
or
that I
less.
would do is I would look back over history and see during the recession times what your sales tax was.
Yep.
And I'm not saying you bring your revenue down to that figure, but you don't bring it all the way up so that's $150,000 more than that particular amount was, because you could have another recession and you could get that for your revenue.
The AUD for the past 2 years had it in the 670,000.
600, yeah.
But so revenue, we do know what the revenue is, and we do know what we have to do something about the revenue. Is called raise taxes.
And you're saying we can't raise taxes?
Well, you can
Without-
close the cap.
That's
Well, and who,
You have some
and
more-
do
you
we have
can
a
up to the
referendum where
amount.
people
No,
vote?
no, you just need 3 to 5.
Yeah.
Well, there you go, that's my point. Why do you think every year, the people who sat around this board had to look at the fact, they didn't want to tell people we can't, pay these people to do the work. At the same time, they didn't want to tell the community we'd have to raise the taxes, so we went into our little slush fund until it's gone.
Yeah, well, I think what most town boards do is, or should do, is they try to make certain that they're spending the right amount of money on the right amount of things. That you're not doing things you shouldn't be doing.
Right.
So what services do I absolutely must deliver to the
Which
public?
is what we've been
And if the public
working on
wa-
since
And if the public,
last,
if-
we're going to.
Well, we're getting close, I mean, we're getting close to
Well, and if
a
the-
group of things that we feel is necessary and not necessary.
And do we think that's going to make?
It would be good to see
It's gonna
that
make-
quantified.
That would be good to see that quantity at this point.
It's not
Quantify.
going to be $60,000.
No, it's not, I agree.
So,
I-
I'm not saying anything else, except I think there's no way that we are going to get this all without raising taxes somewhat. We need to be thinking about that, and we need to be communicating with the community.
but also if there's
What's that?
60,000 more in cuts, if there's 60,000 more in cuts, I mean, that's a hard one to go back to the public and say, what do you want to cut?
Exactement.
Take out Crowell
I
Park?
rest my case.
What do you cut?
Well, before we do that, I'd like to see quantify what the cuts we
Yeah.
proposed are.
Well,
Well,
What it adds up to.
you'll know, by September 20th, we
No,
have to know.
Why can't we know by like,
we got it
Next
before
week.
September 20th.
What?
don't we know what they are now?
What?
The cuts.
The proposed savings.
Savings.
There's some proposals that the board put out,
We made recommendations last week.
at
Yeah.
the board
You
meeting.
got that.
But two things are true. There was never a total, what that totaled to, and there was also never an agreement about which ones we thought we would recommend to the board and which ones were not. We still haven't had that discussion.
The recommendations, if they were all implemented, I'm reading from the thing, would be somewhere between $130,000 and $145,000 in savings, if everything on that
Savings
initial
for
list.
2017.
16.
And what would the run rate be for 2017?
That one's the one, that one.
17.
Wait, one bucket has a two-shot revenue.
Yeah, well, some of them are some were projected for 2017, others were immediate.
So I-
Well, that's what I'm talking about the 2017 budget.
It should be better
The
than
2017,
It has to be better.
that money of the town hall reserve
Right.
being liquidated to pay pension costs, that only covers 2 years.
Right.
That's,
That's only 70.
I don't want to call it one shot, it's a two-shot.
Right.
Right.
And so that does not help you structurally.
It just,
Maybe Mike will find out.
That's true, that's true.
You want to be careful, because I think that the real numbers, as far as the structural costs that you propose on program, is probably somewhere around 40 or 50,000.
yeah.
Per year.
Yeah.
Mike, in terms of borrowing money, we can borrow money against equipment in the highway department
You could do that, yeah.
to buy it over a long period of time,
Mhm.
which would free up cash flow, I would think.
Mhm.
And is there anything else you can borrow against?
Well, you could do tax anticipation notes, but I don't like to do that. I don't usually recommend that because then you're just getting, you're kicking the can down the road.
No, I understand it's kicking the can down the road. I also understand that I'm opposed to it because I'm not sure that the board 5 years from now would care about managing it properly. But just in terms of options, can you borrow against this property? Can you borrow against
You can do a general obligation bond and borrow against the revenue stream of the town. Yeah, you could do that. I'm not for that because again,
The stream of the town
that's-
is insufficient to support the expenses of
Yeah,
the
but this is the
town.
American way. We're America.
I'm gonna go home and have a drink. I'm so sorry.
you didn't let me finish it.
Yeah.
But you're right. That's why I say I don't propose borrowing for operational costs. That's why I don't propose that. But you can do that. I'm not saying you should, but you can.
You would not recommend it.
He's just asking.
Just ask.
Yep. You could do that.
I think an important next step would be to update our forecast for this year, to go line by line and see what we estimate, given, Tammy understands where we are and what we have and what we may not need. We really should get a good figure on that versus that 512,000 shortfall for the year. What do we think we're gonna come in this year? first step.
In terms of budgeting for two.
Well, again, there's some difficulties here, because Tammy's spending, she's doing her regular day-to-day job. I know that tomorrow afternoon and Wednesday, she's sitting with me just to start to put the budget together for September 20th. And, I think the drill is she's gonna be sitting there with the Excel spreadsheet, and I'm gonna be the double check on the numbers as we go back and forth. But yeah, again, you two in particular, along with Julie, did yeoman's work in identifying expenditures for 3-digit purpose codes. And so now all that's coming together, and we're gonna fill all those 3-digit purpose codes on everybody's budget. Now, most of the budgets are really easy. Highway's not easy.
Right. But your 217 budget should really be dependent upon what you spent in 2016.
Yes.
You've got 2015
Plus
actual, let me finish,
any audit.
and you've got 2016 actual coming up. That should be the basis in how you
It is.
do it. And then actually, you even talked about doing a zero-based budget, where you say, okay, this is what you spent. Now, let's start, what do you need?
Well, and again, for the smaller departments, that's.
But again, I can't see 2016 separated from 2017.
Well, again, let me just go through this. For the A fund, that's not such a big challenge.
Yes.
And in fact,
And for DB, it's not a big challenge either.
all day-to-day over in Catskill, that's exactly what we did. We sat down with department heads and the small departments, and we said, this is what you did in 15, this is what you've done year-to-date. Now, reality check, let's go through from the zero base and see what we're gonna do. And we did all the A funds. Got it done, one day. It'll take us 3 days to do highway.
I mistook highway. I was thinking it was easier because the sales tax is one big lump number, but we still have these huge expenses.
The expenses.
That really should be forecasted
Yeah,
to the best of our
it's a
ability.
lot more work here.
And don't forget this one,
Yeah.
that's the big one.
Yeah.
Should we assign it to someone? Could someone own that?
Yeah, I just wanted to jump in when I said, kind of like, whoa, is for, I don't know how time is going to take a look at where we're at to date over the next 2 weeks, because something's got to be priority. You got to get the budget ready for 17, and she's got a regular job to do. And there's nobody else that can do
She's
her job.
stressed too, I'm telling you right now, she's stressed.
I mean, again, I'm coming in for a day and a half to sit down to help her do this, and I know that she's not gonna get anything else done while she's doing that. You know, we did it over in Catskill, somebody from Patterson Kotsky, Nicole and myself, and another Tammy, her name was Kirsten. 3 of us, we had Nicole, me, and Kirsten. Here it's Nicole and me, or excuse me, Tammy.
And Lisa can help if need be, but, you know, it's up to you guys.
Maybe the capital.
Well, I would like Joe to send me his capital budget, and I think we sent this to Tammy, but if not, you can take this copy here and give it to him, and just fill it out just like this. What are your immediate needs? What are your wish lists? How many? Prioritize it.
Who's meeting with you? David, you're meeting with her?
We're meeting tentatively Wednesday morning.
There you go.
And if you want that spreadsheet, I'll send it to you, and you can just update that spreadsheet.
Yeah. I've seen, I think he does have something. like
I'm
this.
sure Lisa sent this to them, because I asked her to, so I'm sure she did.
I'll just take a picture.
I'm concerned we're coming to the end of the year. And the longer we wait on pinpointing what we're going to spend, the more opportunity there is to let it be spent.
Yep.
And we could lose control. And if I had, my goal would be to spend as much as I can so that I can have the basis for spending more next year. So I'm just saying you lose, maybe that's an issue we need to address, having so much in one person.
But you've clamped down almost completely on A fund, B, and
Jim, you've done like 85% of the work already.
I have, but I don't know the pension timing. I did it based on year-to-date actual, but I don't know the timing issues.
Well, we don't know what the pension's gonna be anyway, we're guessing what the pension's gonna be.
yeah, we're still,
So I think it could be better than what,
pensions are a look back. You explain.
Yeah, and in September, you'll get a report from the controller's office that says this is what your proposed budget's gonna be. And that's what it's gonna be.
See, in November, the payment is not for our fiscal year. It's for the state's fiscal year that ended March 31st.
Correct.
So in November, we pay for what was due in April of 15 to March of 16.
Correct.
So if you want to figure out what you're going to pay in November, you already know that number.
See, if we
And,
go
and,
to,
and so now when we go to budget, we sit around and wait, is it going to be 15.6?
Right, but
We
that
don't have a
number's-
lot of jurisdiction for
Shouldn't
it.
that number be fairly stable from last year to this year?
It probably should be. The market's up, so
Right.
more than likely,
So
yes.
that should be pretty stable.
More than likely, yes.
Well, if you remember last year, we got the great gift of 1% reduction.
Yeah.
So we're only paying 15.6 instead
But
of.
isn't that, those are really like 3 years back, those actual.
2 years.
Yeah, two.
you're talking about the,
Yeah, but you're actually paying for what went on financially 2 years back.
so the discount rate for
The rates, yeah.
Yeah.
I think they do like a
Could
10-year
be,
average.
percentage of salary.
But that's going down, maybe our payment goes up, right?
If what goes down.
We'll probably end up budgeting, we don't have too many tier 6s or tier 5s, almost everybody's a tier 4, so we'll probably end up budgeting probably 15.6% across the board on payroll, and that's our number.
It's probably gonna be stable, if that's your question. I think that's your question. It's probably gonna be stable.
Yeah, but I don't know how to forecast that relative to the budget. I don't know if the budget.
I think you just use whatever is, if the actual from last year in accordance to budget was close,
But in some cases, we have
Fewer employees.
well, again, we can,
We'll take current payroll at 15.6.
yeah, we can figure that out.
It's the same thing when we do our costs. for-
When you get into those situations, just have Lisa
Employment
help
tax.
you. Lisa will be able to figure that out.
Well, also, we won't be doing an aggregated 0.8. We're going to do, each function will have its 0.8. So instead of using 1,900 accounts, we use 1510.81,
Right.
1510.86.
Right.
So we get much more detail.
When we meet again on September 1st, by that time, there should be at least a draft
When,
tentative budget.
Bob, when does your health insurance policy come due?
Oh.
January 1st.
Yeah.
We're
So,
looking into it.
yeah,
Except for a small cadre of retirees over age 65, very small cadre. 3 people, very
Right.
small. Everyone's right now in a Teamster Upstate Fund. Collective bargaining has, it's kind of out of school, but they've agreed through collective bargaining to go to a Albany fund. So it's the Albany Local 296 fund. That will bring the cost of the plan down, and we're talking about premium plus high deductible, to slightly less than what it was last year.
okay.
So we're going to come in a little under on that. There are 5 employees that are not in the bargaining unit, and they will have between now and sometime in October to decide if they're going to go to that fund or a market-based fund that's very, very similar with similar cost. So long-winded saying, this 2017 medical cost on a per head count will be slightly less.
Good.
Now, in the aggregate, it'll be a lot less because there are fewer employees that do that.
So we'll have a document with everything in it, we'll have something to work on, you know.
DB might be rough yet, it could be real rough, but if at least the A, there's absolutely no reason the A won't be done.
Who's working on DB? I could see that being the hardest.
We're meeting with Joe on Wednesday.
Is it tight? It's tight for them, but by the 20th, it has to be done. So,
Or
I'm sure the
it's done for them.
supervisor would like to have something earlier than.
Town board, but
Well, I mean, one thing, just
Presenting it to us.
yeah, it's really, Mike has pointed out several times that we really do have to treat A and B separately, to the point of A and DB separately. And A is the distressed fund over and again. The DB is just got to get right or it's going to be a distressed fund. So A cannot be business as usual. This cannot. It's impossible. DB can be close to business as usual for a little while. It's just got to get right.
Although it's the largest one, that's the most theoretical.
Not according to Joe.
To the tax levy, it's the same. They're both $600,000 funds to the levy. They just get the advantage that they get the sales tax.
All the questions for the council?
Mine has.
Well worn out.
Yeah.
So this means we've spent 4 hours in meetings today. 4 hours.
Thank you very much for.
My pleasure.
It's very helpful.
Glad I could help.
Thank you, Michael. If there aren't any other questions, does anyone in the audience have any questions?
Oh, sure.
I'll try to frame it as a question. I think tonight's presentation was great. I appreciate everything I heard. I think that if my tax bill goes up by 10%, I'll understand the foundation and I will accept it. I'm hoping that the town could provide kind of like a fact sheet or a plain language, something to put on the website, because I think that the numbers were real and I would hate this to become a political thing. And I just want to say if my taxes go up by 10%, I can stand with it.
Well, that number, I mean, don't go around with that number.
Worst case. But I just think, you know, that you guys have done so much work. I think everything was genuine. I liked everything I heard tonight. And I just would like the rest of the town to understand it as well as we heard it tonight.
If I could just jump in here, what I like to see done is what's called the budget document, which is separate from just the budget. Imagine that each one of these funds, Justice Court, Town Clerk, the Building Department, and of course we're going to be talking about Highway because that's a really big one. But each one of these have a personnel line, and each employee's line will be stated. This line item budgeting is no longer aggregate. So all of the personnel lines, called point ones, will be, if they have 3 employees, there'll be 3 lines. And they'll say exactly what their salary is. If they have a longevity bonus, it'll be in there. If they anticipate some overtime maybe, that will be in there. If there's any seasonal help, that's in there. So all of the personnel lines you can see, it's just 4 or 5 lines. And then we have all these things called their expenditures. And we have these little purpose codes, they're called, that are 3 digits. And so they're grouped, and so you get to see the group of utilities, so telephone, electric. It's broken down some, not ridiculously so, but it's not aggregated. And most of these departments literally will fit on one horizontal piece of paper like this. And you can see it. And so it'll say Justice Court, and you can actually look at that, and there might be a few words at the bottom saying our Justice Court does these nice things for us. Next page, you get to see that for assessment. Next page, you get to see that for town clerk's office. And that really makes it easy for us, the public, to go through page by page, because otherwise you see these funny little documents that Mike has here. And you lose it. It's just too many numbers.
I was thinking even more plain language than the description you just said.
Well, it is plain language, because it actually says exactly what it's for.
That it could be a description that says, you know, this has been building up over a couple of years.
I mean, the problem.
Yeah, and we're just trying to write it.
Yeah, actually Marie's been working on a narrative.
In history, that's all.
I'm sorry, I thought you wanted to understand the transparency.
I actually understood what you guys were talking about tonight. I thought it was great.
Well, Marie's working on a whole narrative.
Okay.
In fact, most of it's done.
And we rolled out with
If I could ask a question, and I'm not an accountant, so. When you were talking about the taxes from real estate that come in Fund A, you had spoke of $600 and some odd $1,000, but that's not the total amount of money that comes in from real estate taxes? Is that what I got out of this?
The total is 1.6 million.
Okay, so if we need to look for money for Fund A, and you were discussing how much 10% would bring in $60,000, the tax bill, where you have 1.6 million total, right? So that $1 million would see 10% more there too, am I correct?
Yes.
Yes,
So where would that $100,000 go?
would go to the A fund,
So there might be
where it's
tweaking.
needed.
We
Well,
might want to.
okay, but you were saying to raise $60,000 for the A fund, you had to raise taxes 10%.
For the A fund.
For the A.
But
But he's saying you
But
can't
your
raise 10% on
$1.6 million is the total tax
Well,
monies.
again, that's the massaging that has to be done.
So it wouldn't have, so it wouldn't be 10.
Okay, so in other words, it could almost
might be
be,
2.5.
okay,
of which
but that was just a number that didn't add up to me.
Correct.
That's one question. And the second one, if I may, and again, I don't understand this, but you had $250,000 in monies that were owed for, that we paid for the bridge. We're talking about that. Now, those monies were taken out of funds somewhere, but they're carried as, we still have that money, or
Yes.
is that gonna come in and
It's an
all of a
asset.
sudden there's gonna be $250,000
just
in those
your-
accounts?
No, that's a good question. You're just changing an asset that's a receivable into cash.
Okay, I just want to understand.
So it's
how it's
already
done.
in there. That's why when I first got involved, I was worried that those assets weren't real. But
Okay.
that
Because it's
we've,
in there as a receivable.
correct. So we've come to the conclusion, based on what we know to date, that we feel strongly that those receivables are real, and we will get that.
Well, thanks. That was the two questions, and thanks for the
Well,
presentation.
just to follow up on your, when we were saying that it would be a 10% on that A fund, we were talking about that would be how much that, the tax for that would be. To the taxpayer, it's hard to say, because let's say that the town board decides that they want to put $60,000 into the highway fund also, because remember, that's going to come up $80,000 short, we think. And there's not as much money in there as what we're advised should be there. So the town board says, well, let's put 60 in the highway, let's put 60 into the A fund, let's cut $60,000 worth of expenditures in the A fund. Now, there's still the DB, actually, yeah, the DA and the B funds, which are small. Dave was up here, and you just couldn't hear it because when we were saying the 10%, he said, well, that's only 5% if we just do the A fund.
Well,
So you
it's
just-
actually less than that, but that's
Yeah.
okay. I appreciate it. I think you should address your A fund problem before you start to put stress on everything else.
Well, I think that's what their point, that's what your point was. We need to get
Yeah, we
And
got
once you
an
get
idea of
yourself
what
on your
those
feet, then you can
revenue
look to build.
Well,
expenses
that's
are
for the
ASAP.
I even commented up here that we don't have any choices on the A, but the DB, the highway, could probably do something like business as usual
Mhm.
for another year or two.
Yep.
Not exactly business as usual, but something like that.
Thank you.
Good question.
I'm on a fixed income, and you just think the taxpayers are a bottomless money pit. Instead of trying to cut other stuff that we don't need, and we pay for it.
Well, they've cut a lot. There's not much left,
Not enough.
not much left to cut.
There's people on here that want to look at cutting more.
What do you cut? If they got rid of Crellin Park, people say, don't cut Crellin Park.
Well, you always pick up something big like that.
Yeah.
There's a lot of other little stuff that you can cut.
No,
I don't know what they are, but you always throw in like Krellin Park or some other big thing.
No, but the little
No,
stuff,
I think
you
that,
cut.
I think, I 100% agree with you that there needs to be a narrative that explains how we got here. But let's publish the information that Mike says about what every penny is spent,
Yeah.
and people then can figure out whether they like to have a court or not. Or
Well, there's nothing left in
It's
court.
transparent.
There's nothing we can cut in court. There's nothing we can cut in town clerks. I
I
mean,
know, I understand. But that's why I say, let's put it out there. Everybody wants to see it, that's fine.
You see that?
And they can come in and make suggestions as to what they would
There's
like to
always
see done.
something.
Any other questions? Statements?
Motion to
Good to see you again.
Is there a motion?
I'm not blaming
Motion,
God.
second?
I just had to just stop hanging my.